Three fintech stocks, but only one can be the true winner. We have Robinhood, who are essentially the Tinder of stocks, letting people buy, swiping left and right. We have SoFi, in which are essentially aiming to be the new Netflix of the banking zone. And of course, we have Nu, in which are taking over Latin America at a rapid pace. But which of these stocks really deserves to be added to your portfolio? In this video, we're going to be looking at exactly this. We're going to be looking at intrinsic valuation formulas. We're going to be looking at the news surrounding them and their potential outlook for the future to help you have an informed decision on what is overhyped and what is underhyped. So Robinhood, founded in 2013, it currently has 23 million users, and its strength is a strong US retail trading base. It's currently only at a PE of 27 and an earnings per share of 1.75 at $48. Robinhood is a trading first platform. If markets are hot, it is going to be making money. If things go quiet, then profits do also see a decline, but it's a momentum play. Robinhood is in a long position on the MACD indicator here, indicating that this is potentially a good time to be buying into this stock, and on a moving average we can see that they are above all of them. Looking at Robinhood's financials, they have an amazing retention rate with a mean coming in at 34%, which is incredible. You want to see that around the 10 mark, so for it to be that high, it's amazing. Again, with their liquidity ratio, this also looks incredibly strong, and their free cash flow could do with some improvements. It's a bit volatile, but generally I don't think it's too bad. With the probability of a positive day for Robinhood being 56% and a negative day being 32%, it does look to be as if growth is in your favour with this stock. According to a 365-day exponential moving average here, we can see that volume is correlating really nicely with the price, indicating that this is supported. And if we move down here to a intrinsic valuation formula, we can see that they are massively undervalued on the bullish side and fairly valued on the bearish side. And going into detail here, I have a bullish intrinsic value set at $98 with the current price being at $48. This shows a massive upside, but on the bearish side, it's only set at $53, but that is still above where we currently are. If we do include a margin of safety of 25% on the bullish side, we are still in a buy position, but on the bearish side, we are actually in a sell. But if we go in between these and take the mean, we are actually still all green. So it does look to be as if Robinhood is actually undervalued. Furthermore, to back this up on Peter Lynch's valuation here, we can see that this is relatively fairly valued when accounting for its non-existent dividend, but this is a very bearish formula, so I would like to normally bump this up to a undervalued just by looking at these results. As I mentioned earlier, the free cash flow for Robinhood is not particularly great, so we do see that they are consistently relatively negative with their growth, so we can't actually conduct a proper discounted free cash flow analysis for Robinhood. There is, of course, risks associated with holding Robinhood. For example, revenue is highly dependent on trading activity. Regulatory risks around payment for order flow, or otherwise known as PFOF. There were some branding issues in 2021 as stocks like GameStop and AMC had trading halts implemented on them, which gave issues towards this brand through a lot of retail investors. And when comparing them to SoFi or Nu, their product diversity is nowhere near on levels in which can match them. So now we are going to be moving on to SoFi. This is a stock in which I've always said looks massively undervalued, and in my opinion it is probably the most undervalued in this video, as we will get onto in the intrinsic valuation section of it. But here we can see that they have a PE ratio of near 30, and I think that's a very cheap range to be buying SoFi at. So founded in 2011 as a student loan refinance startup, it is now a full-stacked fintech company leading banking, investing, credit cards and insurance. As this company became a bank after acquiring Golden Pacific Bancorp in 2022, which was a huge move for SoFi. SoFi offer a broad range of products. For example, they offer personal loans, student loans, mortgages, credit cards, stock and crypto investing, SoFi Invest, and high yield savings. So when comparing them to other companies on this video, they are definitely a more diversified company, but they are going to still be affected by interest rates, of course, as these loans are going to be something in which people won't want to take out if interest rates are going to be high. They have rapid user growth with 7 million members and climbing. They have a heavy brand presence with things such as the SoFi Stadium, which is an NFL partnership, and of course their CEO Anthony Noto is quite a prominent figure online, specifically on X. So what exactly do their finances look like? Well, on a retention rate here, we can see it's 16% on a mean over the last 5 quarters, which is again incredible. Not as strong as Robinhood, but it is still really good. And on a liquidity basis here, we can see that for every dollar of debt in which they owe, they actually don't have a single dollar to put this back into. So just basically shows that they hold a lot of their liquidity in assets, which is not liquidity at that point. And on a free cash flow, we can see that they aren't actually doing too well either, similar to Robinhood. With the probability of a positive day being 51% and a negative day of 37%, this stock has fallen off quite drastically since its highs here, and I do think that we can expect to see this climb back up. We do have earnings coming out early next week. They've already been, and they were really good. So it does show that SoFi is in a really strong position financially, and on an intrinsic valuation formula here, you can see exactly why I think this stock is massively undervalued. Later on, I'll be comparing all the intrinsic values all together, so you can see where I've upgraded them and downgraded them over the past couple of months. But here on the left, we can see a bullish intrinsic value of near $150 and an acceptable buy price of $110, which is obviously way above where we currently are at $12.70. And on the right here, I have an intrinsic value set at 74 and an acceptable buy price of 56, indicating that this stock looks to be a massive buy. On Peter Lynch's valuation here, we actually yield a result of 7, which is off of the charts. So that is incredible. And similar to Robinhood, a discounted free cash flow analysis is not conductable just because of their super poor free cash flow. On a day chart here, we can see that SoFi is obviously down since their peak, and they are actually now above all of the moving averages, the exponential moving averages, except from the 100-day in which they are just playing around with at the moment. And on a MACD indicator, we have now just opened into a long position. Of course, here we saw them triple beat their earnings, which were incredibly strong. So I do expect to see SoFi climb up quite rapidly over the next coming years. It could be a brilliant stock to momentum trade along with the other two, but we will go over that at the end of the video. Okay, so now we're moving on to New Holdings. This is a company in which I also think looks massively undervalued. Founded in 2013 in Brazil, this company offers digital banking, credit cards, personal loans, insurance, and investing all via mobile devices. It currently operates in Brazil, Mexico, and Colombia and is looking to expand. Its IPO in 2021, backed by Warren Buffett's Berkshire Hathaway. So there is a lot of big names behind this company, showing that there is a lot of promise. I think it's fair to say, though, that I think that Warren Buffett did sell out a large portion of his position within New, so there is potential doubt along large investors within New, but in my opinion, I still think it's fair to say New is definitely a strong company. It's had massive growth over the last couple of years with 90 plus million users, mostly in Brazil, and it has a huge addressable market within Latin America as millions of bankers are looking to move to digitalized platforms. It does have a very strong brand loyalty within Brazil, seriously, as people love New, like it's almost like Apple or Nike to them, as they're quite attached to the fact that a Latin American company is doing well. And its revenue is growing 30 to 50% year over year. Massive top line momentum for New. There are, of course, going to be risks with this company, much like the other fintech companies. For example, their user base is very low income, so their margins per customer aren't as high as the other companies, but they do, of course, have more customers. There is a currency risk as it is tied to the Brazilian real and the Mexican peso. But with some of their recent moves only just pushing this company higher and higher, I think it's fair to say that New does look fairly valued. So now let's move on to a financial analysis for New Holdings. So on a retention basis here, we can see that they have a mean over the last 5 quarters of 23%, which again are incredibly strong, actually better than SoFi's. I don't think it's as good as Robinhood's though. They have a liquidity ratio of $18 per every dollar of debt in which they owe, which is just absolutely incredible. I don't think I've ever seen a liquidity ratio that high, and their free cash flow, unlike the other two companies, is actually positive. As far as the probability for this company goes, there is a 52% chance of a positive day and a 31% chance of a negative day, indicating that growth within the stock is actually still relatively strong. We haven't actually seen that much in the last 365 days, as we have seen this just continue to look as if it's declining on the exponential moving average, but there is potential for this to explode, especially when you see stocks go sideways like this. A lot of the swing traders get bored and get out, so when it does go up, it's more likely to be supported. And for the intrinsic value of new holdings, I have a high set at $32 and a low set at 16, with the current price being at 12. I think it's fair to say this company definitely looks to be a buy. If you include a margin of safety of 25%, we are still also in at a buy on both sides of the spectrum here. And according to Peter Lynch's valuation, this is priced in at a score of 1.4 or 1.5, indicating that this stock looks fairly valued to undervalued. And on a free cash flow, this is something in which we can actually conduct, because their cash flow is positive, and in the next 9 years we can expect this stock to be worth $110 based off of their shares outstanding and their free cash flow growth. 3 years time it should only be worth $36, and this year it should be worth $12.26, which is just below where we currently are. But if we basically take an average of this free cash flow and all its intrinsic valuation formulas, we can deduce that this stock does look to be a fair buy-in at this price. And again, we are in a long position on the MACD indicator. I do think we are likely to see a lot of momentum within this stock coming up. We do have their earnings coming up on the 13th of May, and I do think that is going to be quite a pivotal moment for New, as they do really need to deliver. And I do think if they do deliver, we are going to see this stock potentially break out with quite a lot of momentum. So to summarise SoFi and New, we'll get on to Robinhood later on because it's not in this section of my Excel spreadsheet. I have recently upgraded SoFi within the last month to be from $118 to a high of $146, and I actually downgraded New holdings, but still it looks to be massively undervalued at this price. And Robinhood is also in at a buy, as you can see here, but it's not, I don't have previous data for them just because I didn't copy it over at the time. Sorry about that, but it's definitely a good company to be buying into. So I think it's fair to say that all three of these stocks look massively undervalued, with some looking rather more attractive than others. For example, New Holdings in free cash flow definitely looks more attractive, but there's issues around free cash flow with the other companies. For example, SoFi is investing a lot into development, so that's obviously going to take a chunk out of their free cash flow. And for Robinhood, their revenue can be a bit volatile, so free cash flow can be volatile as well. So let me know what your favourite pick out of these stocks are. Is it SoFi, is it Robinhood, or is it New Holdings? I would like to know your opinion in the comments. If you think I've missed anything, please do let me know in the comments. I'm trying to keep this as short as possible. So with that being said, I hope you have enjoyed this video. None of this is financial advice, and I'll see you for the next one.